Markets recovered briefly, then got rattled by China's tariff announcement. And now, the markets are consolidating during the late evening. Australia's dollar jumped on China's whitepaper news. Is China playing defense again? Or is it still a deadlock with the US? And a new wave of global rate cuts might be coming. If economies remain at a standstill and things don't change very soon, this could mark the beginning of a much bigger economic shift. First, a quick disclaimer. This video is for educational purposes only. I am not a financial advisor, and nothing here should be taken as financial advice. What you're about to hear is my personal view, based on research, experience, and market observation. Always do your own research before making any trading or investment decisions. Welcome to Markets and Global Trends. China just dropped a bombshell today, a white paper outlining sweeping fiscal and monetary easing, aimed at reviving domestic consumption. This is Beijing's way of saying, we're not backing down, we're doubling down. The announcement came right after Washington imposed a jaw-dropping 100% tariff on Chinese goods. And tomorrow, China will retaliate. Not with words, but with action. An 84% tariff on American imports, up from 34%. But here's where it gets interesting. Why did the Aussie dollar rally on this news? Simple. Australia's economic fate is closely tied to China's domestic consumption. More stimulus in China means more demand for Australian exports: iron ore, coal, and agricultural goods. So, when China signals economic support, the Aussie cheers. But will it last? Meanwhile, across the Pacific and beyond, a new chorus is growing louder: emergency rate cuts. The Reserve Bank of New Zealand just slashed rates by 25 basis points. Their economy, weak, sluggish, and exposed. And the Reserve Bank of New Zealand isn't ruling out further cuts. Just a few days ago, I was optimistic. China hadn't escalated tariffs, even after Trump raised his. It felt like they were showing restraint, signaling resilience. But now, that moment is gone. The tariff war is heating up fast. The US strikes with 100%. China hits back with 84%. And the global economy is caught in the crossfire. Markets rallied briefly on hopes of stimulus and cooler heads prevailing. But that relief rally was short-lived. The moment China's retaliatory tariff hit the wires, markets dropped. Stocks sold off. Risk assets tumbled. And investors are now rushing to safety. If this tariff war escalates further, and no talks are held, here's what might unfold. Stock markets around the world could bleed further. The Japanese yen and Swiss franc, classic safe havens, are likely to surge. The euro is gaining ground too, perhaps because investors are seeing European assets as more resilient. Treasuries and global bonds may rally, just as they did in 2008. But this time, it's not a crash, it's stagnation. Oil and copper, likely to fall further. Commodity currencies such as the Aussie, Kiwi, and Asian FX could face more pressure. Now comes the hard part: predicting what happens to gold, Bitcoin, and Ether. Gold usually rises when central banks cut rates, as currencies lose their appeal. But in chaotic periods like COVID-19, gold's direction was unclear in the early days. Bitcoin and Ether, still early days to define path. A lot of the bad news has already been priced in, so we may not see a massive crash overnight. But unless there's real progress on tariff negotiations, we're likely entering a slow, grinding downturn. A long, risk-off winter for global markets. The world's two biggest economies are locked in a high-stakes economic war. And the fallout is just beginning. Watch central banks closely, monitor China's stimulus response, and don't ignore the quiet moves happening in safe haven assets. If you found this breakdown useful, make sure to subscribe for more in-depth market analysis right here on Markets and Global Trends.